And welcome back to the RationalInvestor.com's data brief. Woohoo! Party, party! Happy Tuesday. Where are we here? 14th of March. Wow, halfway through the month of March already. Man, that went quick. Of course, we've been counseling everybody in the world about the Ides of March. What do you think, everybody? Have you been now fully schooled on how insane the Ides of March can be? And as some computer people have been suggesting to me, today is a popular day in, I guess, mathematics land. Happy Pi Day, 3.14, I guess. So anyway, here we are, back in the saddle. Was that whole banking crisis thing, was that just sort of a flash in the pan? Then you're here and then you're gone. I don't know. It appears that the stock market is back happy again. We did have Econs come out today that basically in line with expectations. I don't think anything was startling there. And of course, what I'm watching, which I think is probably more telling than these big headline numbers, is I'm watching things like U.S. retail sales. And this, I think, is probably the most important data set that we should follow with regard to inflation. Lots to talk about here today. Of course, crypto fans, I'm quite shocked at how that last Algo signal played out. Came in a little bit early, and actually, ironically enough, I strapped on a manual short while this long was working. The short, actually, the setup, it played itself out, and it hit its profit objective. I even got a little greedy on the short side. Took a little bit extra money out of the market, and then all of a sudden all hell broke loose and everything's just going straight up here now that I guess the burr machine is back on. But probably what's scary, though, and this is what really bothers me about all this, is what scares me is doesn't this look maybe just a little too far too fast? We still have the FOMC meeting ahead of us. All this was the Ides of March and a whole bunch of silliness. And I think I've shown you repeatedly of late that good old Bitcoin, it loves to rally into these FOMC meetings. Kind of something like this, and then just puke out the other side. So, what I'm concerned about is, as you can see, this does look like a fairly well-defined megaphone pattern here. And unfortunately, I don't know how many times this can go play ping pong back and forth, but I suppose I could probably do it a few times. So I suppose in the after party, I spent too much time yesterday going over all this kind of stuff in the regular show. We should probably do this in the after party, but here's the FOMC. This is the Ides of March that I was worried about, and of course, the humans went absolutely stupid crazy through this whole event. What I'm worried about, like I said, is the market historically has liked to rally into these FOMC meetings. And then what happens on the other side? This is, that's not normal. That's not healthy. Maybe normal for crypto, but it's not healthy price movement. This is supposed to be what they call the price discovery process. And you can see how we face ripped up here and then had to grind our way back down. So if you were able to take advantage of this, then awesome. Way to go. You rule. You're awesome. You're the best. I was able in altcoin land to squeak out a really nice trade out there yesterday through all that insanity. And interestingly enough, this thing's coming back down to earth. And I've not often noticed in the past that when I do these and I tweet out, hey, banging out doubles and all that, all the people in crypto get angry at me and they blame me for stopping the bull. But I think probably that was just a little too far too fast. And you can see what often happens following the too far too fast. So pretty wild market. As I had said there to start off the show, the question really ultimately here is, has the regional banking problems, the regional banking banks down in the States, I don't know how else to describe it, Has that played itself out? Was it just a red herring? Was it just basically, and keep in mind, Jerry said this repeatedly. I think, in fact, before they take their first bite of their babies on Jekyll Island, they have to swear an oath that they are going to try and destroy anybody who gets in the way of this cartel monopoly. So, is all of what you're seeing with regard to the regional banking problems, is this nothing more than the cabal trying to kill this particular competition for them? Obviously only time will tell. Then also too, what was really interesting about the SVB issue was that their number one depositor was actually a huge subsidiary of this massive company that I think basically controls the U.S. government from a financial perspective. So, looking at these things like Western Alliance Bancorp, I mean, is this real? What's going on here? Is this the Ides of March freaking people out? It's quite remarkable to listen to in the 21st century, we're still subject to bank runs. I mean, I would have thought they could have come in very easily in and just said, look, I will guarantee all deposits, done. But anyway, point of the matter is, I don't know whether this has been resolved. When I look at a chart like that, that to me says, what's the statistical probability that we have to trade up and fill in these holes? What's the statistical probability we're going to have to come back down, trade down, and fill this hole? I think you all have a pretty good idea of that. I don't think this issue is done with by a long shot. And if anything, actually what I do like is when I look at this Goldman chart, we're probably going to counter trend rally back into resistance, fill in some gaps, that kind of thing, Wyckoff check. Then we're going to have a really big showdown down the road. In fact, actually, Joey Diamond, when I look at this chart to me screams head and shoulders top up here. So if that's the case, then we're probably going to see a counter trend rally back up into at least those levels there. So here is Joey right now. Yes, we gapped higher, but obviously they're selling into this. And then of course Joey's got his issues with regard to Mr. Epstein and stuff like that. I mean, I'd love to see that guy get taken down because of all the Epstein stuff. But nonetheless, this is kind of the pattern, and what I envision happening is that this all comes to a head sometime this fall, way over here in September, October. So, I think for all intents and purposes, the Ides of March kind of conversation, they probably put the fear of God into the banksters and probably also into the Republican part of the Congress to, man, you're going to listen to us and raise that debt ceiling? So we'll see how that goes, but I don't think this issue is dealt with. Having said that, I think the sort of stopgap measures have been put into place. We'll see how that goes. I don't really have anything specific I can make reference to, but what I would simply say is that, the image that we put out here recently about Bitcoin was, I believe that this hammer came in basically on the announcement that the Burr is back on to bail out all these little banks. It'll be interesting to see what happens, because technically they could just simply, theoretically, these banks all own U.S. Treasuries. And I think I showed you guys recently, I mean, half of the reason why we're in this mess is because the bond market, of course, has gotten absolutely destroyed here over the past year as the Fed's been raising interest rates. This was this big Jupiter-Saturn cross. This was a huge, 40-year event. And frankly speaking, I'm actually quite disappointed in our society that more people didn't pick up on this. I mean, even if it's something as simple as, that sure looks like a big honkin' fractal top kind of idea. But this was a huge, long-term, cyclic, whatever the hell you want to call it, a huge historical pivot in the bond market. And to hear that, like SBV, or whatever the hell the damn thing was, SVB or Sam Bankman-Friedman or whatever the fuck that thing's called, to hear that they didn't even have anybody at the risk management helm. Nobody. quote unquote managing risk at the bank. I mean, how incredibly irresponsible is that? So, ironically enough, this actually is what was supposed to happen. And yesterday in the after party, I got all upset because there are social media people with tens of thousands of followers, tens of thousands of viewers who call themselves bond kings and stuff, and we're just uber bullish up here, just like stupidly so. And I mean, that you couldn't be more wrong in the marketplace. So there's your reason why all this is happening. It's not, and nobody's defaulted. It's just these banks that do reserve lending and all that nonsense. They're collateralizing bonds, and the value of the bonds are falling. So that means the collateral that they can, or the actual sort of net borrowing that they can justify based on the value of these bonds, which they should have never been doing to begin with. The net borrowing that they could do against that shrinks. And so as a result, the shrink is what the problem is here. It's not the fact that anybody's defaulting. It's just that these stupid banks were collateralizing these government debt issuances, and the value of the debt issuances have been falling. So that means that the amount of money that they can borrow has got to fall too. But like I said, the SVB, they actually came out and somebody said that there actually was no risk manager at the job over the past 6-8 months. Oh, give me a break. It's so irresponsible, the capitalism in our world. So anyway, there's your backdrop. I think it's just a reiteration of what I said yesterday. In the short term, the $64,000 question, like I showed you with Bitcoin, is what the heck is the Fed going to do here this coming, they meet, FOMC meets basically 1 week from today. So you're probably going to see a lot of position squaring. This is a very important options expiry date here on Friday the 17th. Probably in the after party, we'll pull up the options data, try and figure out where the sort of the maximum pain is. The options people can inflict on the market, i.e., where is the heaviest open interest in the calls and the puts, and probably that's where they take the market out, somewhere in that area. So we'll do that in the after party. My hunch is that everything that you see in the market is going to be associated around this options expiry. And I wouldn't even be surprised that this sort of dead cat bounce that you're seeing in the financial assets, we showed you some of the bank shares and stuff. It's probably more to do with this options expiry event. Somebody sees, oh crap, look at these regional banks. They're down on their knees. The guys that own the puts are going to get stinking rich if we take the market out here. I know, let's all collectively get in there and buy some of these and declare the crisis over and get the price of the assets above the strikes. That's what I think is going to happen here. So, that sort of puts into context what's going on here. Having said that, and of course, I don't know whether we did it in the public show, but in the free show that I guess the other way around. In the private show, the after party show, yesterday, of course, we did a deep dive into short-term interest rates and the interest rate cycle. Are we bottoming? Has this pivoted? Are we still in crisis? All those kind of things. I don't see any change here at all. And interestingly enough, through that credit crisis, the short-term interest rate market started to freak out in earnest again, which of course sent this spread skyrocketing higher. But you can see with the intervention by the Fedsters, turn the burr back on, all that kind of nonsense, things are calming down here a bit. But can the Fed officially end their interest rate rising cycle? I don't think so. And more importantly, actually in Stanley Druckenmiller, a guy I highly, highly respect in the marketplace, and of course, he was the one who was talking about, getting very angry at the banksters for fucking us over here with this 20% annualized retail sales number based on the fact that they took interest rates to zero. And they blatantly encouraged Congress and Biden, Mr. fucking socialist Skeletor, to go and just spend as much money as possible. And of course, they did that. And as a result, here's your crazy ass insane inflation. And Mr. Druckenmiller has been very insistent. You got to get this number back down. The good part about it is this reported here. Now we're back down to 2.6%. So, and this is a relatively real-time data point. You know, a lot of like the employment numbers and even some of the inflation data that you see come out is kind of delayed a while. So, you know, this is an encouraging number, but also too, this is, well, we're doing everything we can to make the consumer stop spending money. So Mr. Powell, of course, has been telling us all that he wants us to feel pain. Well, you know, one way for us to feel pain, of course, is to, oh, you're not going to be able to get your money out of the bank. What? Oh, I guess I better not go buy G.I. Joe with the Kung Fu grip and better save my money for food. That kind of thing. So the retail sales number is starting to come back down to earth, and it's actually starting to get into areas now where we would like to see W's come in, because we are basically back into that neighborhood where this quote unquote acceptable inflation is okay. So this is the number I'm going to be following very closely, and you can see it made a new low here. The headline numbers, of course, that the public is going to be followed, the CPI, the inflation rate, still stubbornly high. I mean, we've come off here. Market was looking for 6.1, came in at 6. Core rate takes out all the volatile food and energy component, came in 5.5, where market was looking for 5.6. So, you know, 0.1 difference. I mean, it's better than a kick in the pants, that's for sure. Month-over-month inflation rate still stubbornly high, right? It's just not. And what I've noticed is a lot of prices that I'm seeing are begrudgingly starting to come back down to earth, which is good because, you know, like when you go to the grocery store, I personally think that in like my country, Canada, that the people that run the retail grocery business, I think that they gouge the customer. They, of course, these are for-profit operations. I think they saw a window where they were like, hey, we can raise prices and blame it on Ukraine or blame it on, Vladimir Putin or whatever. And I think they took advantage of us. And in Canada, they were like, parliamentary hearings, why are you gouging the customers? And, you know, the grocery store owner-operators came back and said stupid things like, well, chicken now is a specialty meat. You have to be a millionaire to afford a chicken drumstick. It's just like, come on. So I actually have noticed at the Canadian grocery stores that they're begrudgingly bringing prices back down to earth, which I suppose is somewhat encouraging. So, you know, the Fed is getting their desired outcome. The issue here, though, is that usually what has to end up happening is you have to see the Fed funds rate, and it used to be T-bills when the government was actually in control. Fed funds, clearly, that demonstrates you know exactly who's in control of our society. But whatever you want to call the guaranteed rate for your short-term paper, that the marker that's okay. This crisis is officially over. And if you want to write this down, this would be good journal stuff for you guys. If you should have your journals out while I'm barking away here. That number has to go higher than the inflation rate. So, in the States right now, I think we're sitting somewhere about 4.5 to 5. I don't have the number just off the top of my head. In Canada, actually, they stopped raising rates, which is a bit surprising, but the currency could come off quite a bit here, because of them slowing down on rates. But I think the consensus is that the Americans are going to continue raising rates, and they probably won't stop until we actually have that Fed funds rate print a higher number than what this is. Once we're at that point, then you say that the real rates are actually back normal and positive again, and okay, we finally got in front of this problem. And as I said, the numbers that I would be willing to follow and I want to follow is I want to see retail sales. What caused this radical, insane inflation punch up? Well, as soon as you start seeing the W's in the retail sales here, look out. all hell was about to break loose. So you can see, based on the data, the economy and the consumer is still contracting. I think Mr. Powell would like to see this a bit more, and he'd also like to see it a bit more in the housing data. But unfortunately, all the oligarchs, Blackstone, all that crap, they're kind of manipulating the housing market right now. It's a funny creature. Anyway, we'll see how that goes. All right, so there's your econs for the day. Interestingly enough, we look at things like inflation rate. I don't actually have any M's there yet, which is a little bothersome because, we always say V tops should be tested. You can kind of see how we had a V bottom. Then we went sideways for a little bit. We got our W. Okay, fine. We have this M top. You might even argue that's a head and shoulders in the data. But we've just come straight down. That concerns me because usually there should be a test of this high. And the irony of it all is that technical analysis works on fundamental data as well. So it's just math, right? All you Pi fans. Core inflation rate, same thing. And really, this is what the Fed's more concerned with. They like to follow this. Greenspan once famously said that, the reason why we don't follow this sort of headline inflation number is because the car that you buy today is substantially better than the car that you bought 10, 20 years ago. So as a result, yes, the price is higher, but the quality of the product is higher. So it's not nearly as inflationary. That's the whole logic behind this core inflation nonsense. But anyway, long and short of it here, that was a new high print. I would like to see an M here. You can clearly see the W here. I mean, that's as plain as day. So that is technically a sloppy M. This high is slightly higher. So I'm not totally convinced that we've actually petered out or, topped out here inflation-wise. And what I'm really worried about is, yes, we pull back and everybody thinks, okay, the problem's solved. And then in 2027, 2028, we get another massive wave of this inflation crap. I don't know. We'll see how that goes. That's after the next Bitcoin cycle. So between now and then, we should do okay. Interestingly enough, as I said to you before, I'm a little concerned that spread is just getting a little too wide. This is concerning here, folks. And of course, now we've got Bitcoin price just literally going parabolic here. So everybody and their brother, of course, is going to be all insanely bullish, and you're probably going to get this time it's different talk coming out of people, which always scares me. I still think that this is very megaphony. I'm not quite sure how this plays out, though. I mean, can you have 4 tags? Is that really a 1? Maybe this is the 1. I don't know. I've only been at this silly technical analysis game for a couple weeks, so I'm not quite sure what I'm doing here. But, maybe it's 1, 2, 3, something like that. This doesn't fill me with a lot of confidence. If anything, I feel vindicated now because our algo did have me go long here. And there was like a week or so where I was just dying 1,000 deaths there going, what the fuck is wrong with that damn thing? But it turns out, actually, it was one cycle, one wave too early. Anyway, if I did get a crossover on the algo now, and I was told to exit, it's going to take a big dump for this to cross back over. My hunch is this doesn't cross back over right away, but we're probably going to get something like this, folks. Be forewarned. And like I said, next week, we've got the FUMC. It's actually exactly 1 week from now. We probably have some funny business going on in the options business, and they want to take the market up into that options expiry. The market's nice and frothy and happy, and everybody thinks everything's happy-go-lucky, and those banking problems, they're not really problems. Then all of a sudden, Jerry comes out and takes a big dump on all our heads. Just be forewarned. The one, I guess what I'll leave off with here is I put this tweet out last night, and I really like this idea. It's a little bit esoteric, but, and not everybody, of course, is an options trader, so it's not really like this is going to appeal to most people. But I really like this thinking. It looks to me like this is an inverted head and shoulders coming in here now. Of course, the last options expiry, we had some major effery against that $15 strike. And of course, they dumped the market. I think they made out like bandits here. Then we had this big reversal. Interestingly enough, this is a really good analogy of everything I've told you guys recently. Pullbacks are buying opportunities. Weekly chart, bottom end of the range. This is a log chart, so the numbers are a little bit skewed, but there's the 50% rule. Here is where we are down here. So market's pretty attractive, 50% level. And again, if you've got your journals out, write this down. This was the very first technical analysis sort of targeting tool I ever learned, like 30 bloody years ago. Hell, it's so easy to calculate it. Guys used to calculate this on the floor of the exchange while they were running their book through, like, the 1920s and stuff. It's a pretty easy number to calculate. Point here is that's a pretty good natural normal technical objective, 50% bounce, WD GAN. And that's what I basically wrote up here. WD GAN would say, and actually a student who's going to be on the show on Friday, Chris, is it Friday that Colin has said he's going to pop in here?
Yep, that's right. Friday.
Oh, ooh, echoey. Did you hear Chris? Chris is talking to us from the Grand Duchy's Hall. Anyway. So he's going to come on. But he actually, on his Twitter feed and his community and stuff, was talking about, and this is something that we teach in the course. And of course, it's cool when I hear students bark this stuff out because it is true. It is factual. And of course, it's so bizarre how nobody out in the marketplace talks about any of this stuff. But Mr. Gann's thesis was that quite often markets will retrace 50% of the previous primary move in about 50% of the time. It's actually a very typical price pattern. And it's interesting, if this is indeed a head and shoulders, this left shoulder did turn above the right shoulder did turn above the left shoulder, so that's legit. And on a log scale basis, if we measure this out, fascinatingly, this target comes in basically right around that 50% level. What probably is going to happen here is we're going to rally into Colin's dump chaser zone. So actually, it'd be really cool to talk to Colin about this on Friday. Our level 3 instructor is actually putting together a sort of 3.5 course module. It's a dovetail to our level 3 course where we teach you options. And he's really gung-ho on spreads. And this, I think, is actually an extremely attractive spread trade. It's going to cost you about 50, 60 cents to put the spread on. And if the market does go to the 50% level, you're probably going to have this thing called away from you at maximum profit. If the stock is actually called away from you above 27, that's the best case scenario. And you basically pocket $5. So, 60 cents to pocket $5. It's a pretty damn attractive trade. So I did put that out yesterday, and it's interesting how today they've actually gone and confirmed this inverted head and shoulders. Always exciting in the market. You never know what the hell's going to happen next. And this is the number one reason why I don't tell people to get into the business of predicting the future. You just don't know what the hell's going to happen. So wouldn't that be an interesting sort of outcome of all this sort of bank bailout? We're going to try and, wipe out the crypto banking industry. I heard there was this one banker, Bernie Frank, I think his name is, and he used to be a U.S. congressman, a very powerful man there. And the Fed bankster guys, they just came in and shut his bank down. And he's sitting there going, what the hell's going on? What happened? So, it's criminal how criminal these people are. It's a cartel. And they're just as bad as OPEC or any other, Mexican cartel that murders American, medical tourists. I mean, cartels are cartels are cartels. They're evil. In fact, they're supposed to be an icon of a bygone generation, bygone human condition. Why is this cartel still have so much power in our society? It's really disappointing. Anyway, point of the matter here is how ironic that the end result of this cartel and their behavior trying to kill the crypto banking industry is, it looks to me like they've actually solidified this bull market run here in crypto. I mean, how ironic, eh? So there are interesting spread trade ideas, and this is actually a leap option where the expiry is actually out into January 2024. So you're buying yourself a ton of time. Could we see the 50% level traded to between now and next January? I actually think that the odds of that happening are actually pretty good.
Hey, Brian.
Yeah, we up to
FYI.
30 minutes here?
We are.
All right. And I asked Chris to be a little bit more proactive yesterday, so to keep me honest here. All right, so, there's sort of your bigger picture in crypto. I've said repeatedly that I think pullbacks are buying opportunities. We had last night an absolutely perfect textbook example of exactly what it is I'm trying to teach you guys to do. This thing was perking up recently, and I was like, I so want to buy this. We had to get a pullback to get the price back down into the bottoming area. Brian's BFF, his favorite fib, and all that kind of stuff. When the market pulled back, through the weekend, or actually just a few days ago, everybody, of course, is freaking out and going crazy and banking crisis. And I had to force myself to go in there and actually buy. And this is the end result. Also, too, I think this is a fantastic example. This is venture capital, folks. Don't kid yourself. Half of the reason why people fail at this game is people think, that SBF guy, he basically thought that, his FTX and, all the tokens and stuff, they all go zooming up. And he thought, okay, this is the new norm. Now my token is going to stay up top here, and I'm a billionaire forever. And markets do their cycles. It's venture cap. Everything comes right back down. And, of course, if you didn't sell and take profits up top, you missed it. So I was sitting there in the lounge last night, and I even put out tweets and the whole thing. Hey, what should I do here? Well, what should I do is follow your plan. And my plan is to make money from trading. And my simple rule is when an asset doubles in price, I have to sell half and hop on off to the sidelines. And ironically enough, I did do that. And I actually have my bid to buy the darn thing right back here. In fact, we should probably adjust this up at this 78.6. How ironic. It's going to be like literally at the level that I originally bought. That wouldn't surprise me one bit here. So this is a good example where I have my initial car on. I've sold half of my first car, got my original capital back, and now I've got that original capital back bidding to buy this back down here for my second car. And every time this thing keeps zooming up, I'll sell another half on a double. If we double from here, then this first car will sell another double of him. And then if I can get filled on the second car, then that'll be a sell there and another sell there, and et cetera, et cetera, et cetera, et cetera. And that, folks, is how I basically did this, 500 into hundreds of thousands of dollars that you see on my Twitter feed here. And this is basically what I'm trying to teach you guys how to do. This is how you compound these returns. So it's just business as usual as far as I'm concerned. But the number one thing is there's no way you can do this without planning ahead of time. Sadly, what'll end up happening, and I can pretty much guarantee you, there will be a bunch of the public that comes in and actually buys this megaphone tag up top here, and they don't realize that they're coming very late to this party. And it's the same thing. Somebody actually had to buy my LOOM up top here, which, as you can see in hindsight, probably wasn't a very good idea. All right, so there's your rant for the day. Hope you're enjoying the ride. Hope you're banging out doubles and just, following your plan. I think there's a lot of money to be made in this market. Go slowly. Don't need to rush. Slow and steady wins the race. And, of course, if you enjoyed this little rant here, we're trying to get the subs on the YouTube page up to 8,000 is our next big objective. So please help us with that. Subscribe, Hit the notification buttons. Maybe I see we got about 40 some odd people over there and 8 likes. Maybe a couple of you could hit the like button, and then of course ring the bell to be notified so that you guys. I did notice there's about 2 dozen people ahead of the video before we loaded that were all ready and gung ho and chomping at the bit for a big whack of the Beamish here this morning before the video got going. So that's great to see. Suppose the only other thing to mention, of course, is we do have Tuesdays. Tuesdays is Pennacook Day around TRI. That's our CTO, Sjord, is on the call. He'll be on the call talking to us a little bit about site development. Sjord, are you there? Ready to go? I think he's there.
I am here. Hi, everyone.
There you go. And he's actually got some heat in his house today. So that's a good thing. Woohoo! So we'll get updated on how the Dutch heating situation's going in the after party show as well. We'll take a look at a bit of the options data. Maybe we'll pick these crypto names apart. I've got my little old lady 2023, I guess 2023 to 2025 plan already up and running, and actually I've got already 16 names on the books, and I want more. The good part about it is if I do bang out doubles on these things, well, that frees up capital to go and buy other names. So full steam ahead. So why don't we leave it at that? Thank you very much for the reminder, Chris. Got that in about 30 minutes. That wasn't terrible. I think you have a pretty good idea of what I'm seeing in the market today. I hope you do. Slow and steady wins the race. Just understand we do have this big options expiry coming up on Friday. So don't get lulled too much into any sort of bull market declaration here. Slow and steady wins the race. Understand there's a lot of ebb and flow here. Thank heavens we're through the Ides of March. I mean, tomorrow is the official date, so that'll be behind us. Hopefully calmer heads will prevail. And we'll look forward to a big old week of FUMC next week. And my hunch is probably a topping out in risk assets following that event. Okay. Have yourselves a great day. PMA for the win and all the best. And bye for now.